Hi, everyone, and welcome to The X, a podcast from inside Silicon Valley about how experience shapes everything, from products to services to entire businesses. I'm Brian McLean, and I'm here with Demetrius Madrigal. Today, we're going to talk about the hugely popular, controversial, confusing, frustrating, and exciting topic of cryptocurrencies. It's not surprising that everyone is talking about it, as Bitcoin has been on a tear for the last few months. So we're going to break it down, but we're going to talk about this mostly from the perspective of the end user. Okay, D, I know this is a hot topic. I know we have gone back and forth and debated this a lot. There's a lot of opinions, not just between you and me, but in the market itself. So I kind of want to talk about mostly cryptocurrencies today, like Bitcoin, Ethereum, Litecoin, and I think the list goes on. There's probably like 100 of them, but not as much on the back-end technology of blockchain. I think most people who work in technology agree that blockchain itself is a great technology that's emerging and is going to be very useful in a lot of industries. And
Yes.
people can look that up on their own and really kind of understand how it works. But I want to talk about what's layered on top of the blockchain, the very first one to go on top of the blockchain, which is Bitcoin. Do you have any initial thoughts? Like, what is your kind of gut feeling about these cryptocurrencies as we're sitting here in 2021?
So I think that it's very important to kind of understand that there is a distinction between blockchain and cryptocurrencies. So blockchain is the enabling technology. It was to some extent built in order to port Bitcoin to coming into existence. Blockchain is amazing, and it is most likely going to be the future. I think it is a technology that is still kind of under development in order to get to where it needs to be useful for a variety of things, from managing digital rights for like photography or something like that, or tracking business transactions internationally. But I think there are still limitations to the technology. And I was a big believer in Bitcoin when it first came out, and it has since kind of my perception of it has taken a blow. And ironically, the thing that has really done that was when it took off and kind of transformed from a burgeoning alternative currency to being an investment asset. And as soon as it did that, and as soon as so much hype blew up around it, I felt like it kind of destroyed its value as a currency.
So why did you have hope for it as a currency? Like, what was going on at that time that made you see this as a great opportunity? Because, we already have banks that allow us to digitally send funds back and forth to one another without paper, without approvals or anything, right? You can use, Wells Fargo has their, I think it's like SurePay or WePay, right? And you can use Venmo, you can use all these other services. So why would this be interesting to you? I'm just curious, like at that time.
Yeah. Well, I think I was interested in Bitcoin and cryptocurrencies in general and the blockchain because of all the things that people say is great about it, right? It's a mistake to say that it's unhackable, right? Because it can be hacked, but it's so difficult to do so that it's theoretically hackable. It's practically nearly impossible, right? In order to hack it, you have to hack like thousands or more simultaneous encrypted machines at the same time. I imagine within 5 to 10 years, there'll be some kind of AI that is able to hack the current version of a blockchain, but it's going to be extremely difficult to do so. It also makes it nearly impossible to counterfeit currency, because anytime somebody adds to it that's not authenticated by the blockchain, then it automatically gets called out and removed. The other aspect was the decentralization of transactions, right? So you could do transactions person to person or with an organization without an organization becoming involved, like a bank. You're not required to go through your bank or a credit card company or something like that in order to make that transaction. But I feel like since it blew up and Coinbase and all these other organizations got established, I feel like it just moved from your Wells Fargo's and Chase Bank and MBNA to now Coinbase and these other exchanges. We just a different middleman, and now there's still a middleman in there.
Yeah, and there's still fees and there's still time you have to wait for transactions to go through. What's a little strange to me, and this was something that really kind of went, the light went on, was that when this first started, you had to have basically when someone sent you a Bitcoin, you had to have these encrypted keys that you had to put in to unlock it and all this stuff. And there were so many people that had one or two coins,
Mhm.
10 coins, and they didn't know what to do with it. And they saved it on old machines. And then those machines would get lost. And then they didn't know how to get back in, and you can't get back in. So it's like early on, it was very much kind of a mess. And so it made sense that you needed these quote unquote wallets and these companies to come in and say, okay, you can use username, password to log in, and then we'll handle all the security, encryption, and that kind of stuff of protecting your coins and all that. But at the same time, our assumption was that this was going to be some sort of tool for making transactions. So like a currency of some type. But once it switched over to being an asset, I really saw everything differently. And it was around that time, I think it was about 2016 or 17, when you said, hey, I think we need to have a little history lesson here. And I was like, oh, here we go. And then you jumped
Oh
in
yeah.
and started explaining the tulip bulbs and essentially what happened with .com stocks in 99. And I kind of want to explain to everyone this tulip bulb thing that keeps getting floated around that people might not fully understand. So basically, there was this thing called tulip mania that happened, and it was a period during the Dutch Golden Age when contract prices for some bulbs of that were like fashionable bulbs, there were ones that people really wanted. They got to extraordinarily high levels. Now these were just flowers, basically. And they got so high that there is records of people like trading houses for them, thinking
Mhm.
that they were going to go even higher and higher. And then it dramatically collapsed in like 1637. And it's generally considered to have been the first recorded speculative bubble in history. And a lot of people go back to these speculative bubble incidents when they're talking about Bitcoin a lot, because it's not tied directly to something that can be used beyond this digital asset, right? So it's not like a house where you're like, oh, okay, I can live in it. I can have friends live in it. I can rent it out. I could do things with it. Gold, you can melt it. You can make jewelry, right? There's like something associated with it. So that concern keeps coming up because I feel like history has kind of educated us, but everyone keeps saying, and I'm not saying everybody, but a lot of people keep saying, oh, this is different, this is different, this is different, but I don't understand why. I really don't. And I'm being honest. Like, I don't understand the difference. I've done a tremendous amount of research, and it feels the same as it did during tulip bulb time, tulip mania, as
Yeah.
well as something I was involved in, which was the .com stocks of 1999 of companies that got spun up. They made no money. They went public and they literally were making no money. And then everything collapsed because at some point, well, you have to make money. You can't just keep borrowing money or taking money from venture cap firms.
So I'll kind of differentiate a little bit between the tulip bulbs and the cryptocurrencies that are currently out there. So, and people compare it to gold also. So here's a fundamental difference between them, right? So gold, even if nobody's using it for coins or in order to as a currency in order to exchange, it still has utility, right? Gold does not tarnish; it does not corrode. That's one of the reasons why it's used quite a bit in jewelry. That's why it became got used in the first place, because you can use it and you don't have to worry about it, corroding or falling apart over time. It's something that is going to last. It's also highly conductive metal, so it can be used very effectively in electronics. So it has some value to it. Even tulips is something that is going to have some value. It's something physical that you can put in the ground and it's going to grow another tulip. Stocks, for example, they represent the partial ownership in a company, and then that company has a certain baseline value based on the fact that it's producing some kind of goods or services. Cryptocurrencies, kind of as they are now, because they are too expensive and too slow to really be used as a regular currency, they don't have any of that. There's no fundamental backing behind it in order to give it some baseline value. It's kind of like owning a stock that in a company that doesn't really exist. And the reason for that is because when Bitcoin took off in stock and not stock price and in the value of the coin, all of the transaction bandwidth, the computational bandwidth, got rediverted from normal transactions of buying goods and services and using it as a currency to now just supporting investment transactions. So it's just people buying and holding rather than actually buying it and using it to spend things. So it gained value as a transaction asset because there can only be so many transactions at a time. It lost value as a currency, which means it got to the point where there's almost nothing really providing a fundamental value behind it.
So when you hear stuff like Tesla bought 1.5 billion worth of Bitcoin and BNY Mellon, I think they jumped in, and ARK Investments has percentage of their portfolio in Bitcoin. What do you think when you hear that?
Well, for the Tesla thing, I think is very smart, right? So there are a variety of people out there, so investors in Bitcoin who are using it as an asset class, and they are amassing quite a bit of Bitcoin. I mean, or the miners also. But there's an absence in what's called fungibility of Bitcoin as an asset. And the fungibility is just the ability to use a good or asset to exchange it for something else, right? So right now you can sell Bitcoin and get money back and then use that or get a fiat currency back and use that fiat currency to buy something. That is basically, it's just kind of extra steps in order to actually use the currency. So by Tesla saying you can, instead of having to skip that step and using this to buy things, you can now use it in order to buy Tesla cars, then it's adds some additional fungibility to the coin and also attracts all those users who might be interested in buying a car. They might go ahead and use their Bitcoin in order to, or other cryptocurrency to buy that car rather than buying another competing car that doesn't accept it. As far as the other things like BNY Mellon and those corporations, I mean, most of them are investment entities who are out there buying it up because it's an entity, right? Like that's a bank, right? So they're basically investing in the future and gambling that it's continuing to go up and they can make some money out of it, increased value. But I would be more interested in seeing like marketplaces taking advantage of this. So let's see Apple and the App Store and Amazon and let's say Alibaba saying, you know what, our job is basically to handle the exchange of goods and services between buyers and sellers, and we're going to buy into this as a currency that would provide a element of a baseline floor value for the currency. But that's not happening, and part of that is because there's so many transactions going on of people buying up cryptocurrency. They can hold it and go, and then the value go up as an investment asset. That it creates a bottleneck. You can't use it as a currency. So I believe right now, if you went out and bought a stick of gum for, let's say, a pack of gum for $1, and you try to use Bitcoin to do it, there's a $22.41 transaction fee, which is down a lot from its peak. It was like 60 something at one point. It would cost you $23.41 to buy a $1 pack of gum. That in itself, relative to like if you use a credit card, it's some minimum fee like 0.5% or 1% or something like that. So in order for a cryptocurrency to really achieve its potential as a currency, it needs to get those transaction fees way, way down.
Well, I think we've come to the point, though, where people are not going to look at this as a currency, right? I mean, pretty much everyone's looking at this as a store of value. I mean, from the Tesla example, I mean, I thought that was a kind of a brilliant analysis you did when we originally talked about this. As you said, if it only costs you $24 to make for the transaction fee, and from a market segmentation standpoint that people who own quite a bit of Bitcoin also are people who love Teslas, then you're basically giving them an option to offset some of their risk by moving a little bit of Bitcoin into Tesla. Now, what that actually tells me too is that Tesla fundamentally believes that the coin value itself, the stabilized price that it's at today, and I'm not going to give out numbers just because like it changes every moment, but closer to 50,000 is going to stay there. right? Because if they didn't believe that and they thought that it was going to go down to $1 next month, then they wouldn't even ascertain the idea of allowing you to transfer 2 Bitcoins for the price
Mhm.
of a beautiful Model S car. Because if it dropped down to $1, that means they just sold that car for $1.
Yeah, well, that's the thing with a corporation like Tesla is if it does drop, let's say in half, they can absorb the loss. They've sold more units, so they're seeing they can report on their balance sheet a certain revenue and then worry about EBITDA later, which is kind of the going rate or the way everybody does it right now. Nobody looks at profitability anymore. They just look at revenue, so they can record it as revenue as sold
Uh-huh.
and worry about depreciation on a separate line item, and then they don't have to worry about how that affects their stock price, and they can work it out in some other way. At the same time, they're getting more units out on the market, which increases visibility and can help affect other sales.
True.
So and I'm sure they've done the math also of what's the probability of this dropping within this time frame before we can liquidate the Bitcoin and all those kinds of things. But most of these companies are not operating on the principle of what happens if our assets depreciate, because that's not what they're reporting. They're reporting revenue, and if it does, then they write it off. So it's kind of ends up being a little bit of a win-win for them.
Well, they're also so Tesla, for example, is very progressive, right? And they're about the future. They're always trying new things, and their cars are
Mm-hmm.
doing amazing things, right? So if you look at that, basically what it's doing is it's signaling to the industry. A lot of these big institutions, venture cap firms, things like that, should have at least 1% or 2% of their assets in Bitcoin, right? And when that happens, it actually shores up the price and stabilizes it. Because I did some research, and I can't verify this research. It came from Bloomberg. Bloomberg got it from Flipside Crypto, but there's something that really, really concerns me, and we can talk about this. So, about 2% of the anonymous ownership accounts of Bitcoin can be tracked back to 95% control over the digital asset. What that means is that about 2% of the people who own Bitcoin own 95% of the Bitcoin. That's an assumption. Even if you loosened that and you said, oh, 80%,
Mm-hmm.
that's kind of crazy, right? So that number will actually get higher and higher as institutions start picking up 1%, 2%, 3% of the actual asset, right? Now, here's the other side of it. More than 70% of Bitcoin addresses, so these are like the individual addresses, like if you and I bought Bitcoin, have less than 0.01 Bitcoin in them, which means that people like you and me and stuff, we own like this tiny, I don't own any, but tiny, tiny fraction of Bitcoin. And then these huge whales out there who got in really, really early or invested in it super early or bought it from seized assets from the FBI, because that happened during Silk Road and all these other issues, all these other things that happened, back in 2014 and I think it was 2013, 14.
Mm-hmm.
Um, they own almost all of it.
Yeah.
So now, first of all, who are these people? Like, if I'm going to invest into this as an asset class, I want to know who these people are. And now this is basically my new government or regulatory board, right? Because they're the ones that are controlling what happens. So you made a really good point earlier when we first originally started discussing this before the podcast. And you said, well, what happens if 1% of those people say, that's it, I'm out. I've made $30 billion and I want to walk away.
Mm-hmm.
So what happens?
Well, what happens is the price crashes dramatically, and it also puts a tremendous amount of stress on the exchanges out there, because now they have to handle 100, $200 billion in at minimum coin transactions, and the stock prices, or the stock price. I keep saying stock price because I'm thinking of these like a stock.
Yeah.
The value of the Bitcoin now, it can bog down the blockchain dramatically. It can bog down the exchanges dramatically, because they have to have a certain amount of fungible assets in order to back the transactions that they're making. And it could also mean that the value on the Bitcoin itself can drop dramatically, because one of the things that is going on right now is that you have a certain amount of people who are trying to amass Bitcoin as much as possible. So you have these whales who are holding on to to a huge amount of it. And if they decide at some point to exit their positions and enter something else, right? Maybe it's some Bitcoin hard fork that they want to get into exclusively, then they have to find a ton of sellers, smaller sellers for the most part, or even I mean, honestly, these are likely to be institutions, right? These are likely to be financial institutions that are the whales behind this, considering the amount that's involved.
Hmm.
They now have to find a bunch of individual or smaller institutions to buy all that, which means now it's going to be distributed more broadly. And it's in order to do that, they're going to have to say, okay, I'm going to sell for anything between its current value and a value Y below that. So it's just manipulating the price of the asset.
Yeah.
That is, to me, that's extremely scary. It's extremely scary as an investment asset. If you told me that, and you also don't know who they are, right? If you told me that you were investing in something that was 95% owned and controlled by Enron, for example, I'd be like, I'll pass.
It's a weird situation too, because I feel like people who are usually talking about traditional investments, like people like Mark Cuban and Kevin O'Leary, and like I said, Ark Investments, and like all these people that are always on CNBC and television, stuff like that, kind of explain their positions on traditional investments. I've gone through and I've watched the videos of all of them over the last 3 or 4 years when people are asking them about Bitcoin. And ultimately, the response really is, well, put 1% or 10% of something that you're willing to lose into it just in case, right? There hasn't
Mhm.
been this super strong argument for why you should do it beyond the probability of it growing, right? So, for
Yeah.
example, if you said, Bryan, I really think you should invest into Microsoft, right? Good
Mhm.
example. You would say, well, here's all the things they're building. Here's all the products that have been successful in the past. Here's where their roadmap is going. Here are the other companies or assets that they own that are also doing well. Here's their balance sheet. Here's their CEO. Here's their previous CEO. Here's how it compares. Right? You spend 3 hours, right, going through and explaining all this stuff to me. And then I could say, yeah, that makes a lot of sense, and they have a lot of fail safes in there, just in case one thing doesn't work out, the next thing will. And you're building a physical product that could be used and touched and deployed, quickly, because it's most of the stuff is software, right? But then when you ask the same person like yourself or someone else to evaluate Bitcoin, it's always a hedge like, oh, well, it could possibly go up. So maybe you should put a little bit of money into it. Not like, oh, here's exactly where I see this going in the future. And that's what concerns me. That's the reason why I'm not invested into it, because I just don't understand it. And I have a real hard time making investments into things that I can't wrap my head around. And people have told me, like, oh, you're just older, so you don't understand. Well, first of all, I'm not that old, and I've lived in Silicon Valley my entire life, right? I still can't wrap my head around where it's going to go beyond just being this digital asset that doesn't really connect to anything else.
Well, it's worse than that, right? Everything we know about any given crypto is based on what somebody's been willing to tell us. Like, for example, if I look up, what's the difference between Bitcoin Cash, like the history of the fork from Bitcoin to Bitcoin Cash, and how it went to a block size limit of 1 megabyte to 8 megabytes. I don't know if that's true, right? That's what's written. That's what's written up. I'm sure it's in some engineering white page out there and some proposal that said, like, here's what we're going to do.
Mm-hmm.
But there's no single source of truth in order to verify that our understanding of for how these protocols are established are actually being followed, or if
Yeah.
that's just what we're being told. Now, do I think that there are lying to us about how Bitcoin works? No, I don't. But would I be surprised if some coins out there are kind of fudging their numbers a little bit? Absolutely not. I actually expect some of the people some of the coins out there who are trying to get off the ground. I expect them to be kind of misleading about what's going on behind the
Yeah.
scene.
how do you I guess internalize or crunch your brain around the other 100 or I don't know 200 coins that exist now?
Well, here's the thing that when it comes to a currency, if this is an asset class that makes sense for there to be competition and for them to determine like, all right, well, it's and to have options of things to invest in. If it's a currency, you want the exact opposite. You want a single universal currency that has an agreed upon value to every single person in the world that you can use to exchange to anything. You want to get away from like like 197 fiat currencies in the world. You want to get to there's one fiat currency that's from a user experience perspective. There's one fiat currency that's an international fiat currency maybe, and I know there's going to be some people who disagree with that on an ideological level, but I'm just saying from a user experience, ease of use perspective, you just want one coin that you can go anywhere in the world. You can spend it on anything and everybody agrees on what it costs. You do not want fragmentation in the experience because now it's like, all right, well, now, I'm using Ethereum and you're using Litecoin, and we have to agree on how much the Ethereum costs and how much the Litecoin costs in order for us to do some kind of a transaction and exchange those for goods, then it's just it complicates the entire experience and makes it unusable as a currency.
Yeah. Well, let's talk about user experience for a second here, because this is something that used to be really bad. It's getting a little bit better in this space. So right now you can buy cryptocurrency assets on apps like Coinbase, PayPal, Cash App. I mean, there's many others. Coinbase is actually pretty good. It's pretty easy to use. Obviously, PayPal, Cash App, that kind of stuff is
Mm-hmm.
quite simple as well. Strangely, when you're on these exchanges, they allow some currencies, cryptocurrencies to be purchased. They allow some to not be purchased. I don't know how they're determining which ones can be and which ones cannot be. But when you're on there, you can buy them and hold them and everything. And it very much looks like if you're on, TD Ameritrade or E-Trade or something like that,
Mm-hmm.
it's kind of creating its own almost like little stock market, right? For all of these
Yeah.
different ones. If you were signing your mom up for this, I know you laugh because I know that she has some technical skill, but maybe not deeply into cryptocurrencies or anything like that. If you were signing up for this, how would you explain to her, Demetrius, why she should sign up for Coinbase and why she should buy some of these coins? Like, even if you don't think she should, what would be your argument for her doing it?
Well, let me level set a little bit and fill everybody in on my mom's level of technical capability, right?
Okay.
So my mom worked for AT&T for 30 years. She actually helped design the fiber optic layouts in order to get all the lines out to all the different everywhere throughout all the cities throughout the country. Since she retired, she has gone hardcore Luddite. She does not own a laptop. She owns an iPad from, I think it's like a second generation iPad that she bought because my sister in law convinced her that she needed it. She uses Siri exclusively to do anything. When it comes to my mom, there is no rationale I can think of it's by it other than like because I told you so. Um,
Okay.
she's not gonna be able to leverage it. It's gonna sit there. If I told her it's like treat it like a CD, or you buy it and you leave it there for a year and it will probably appreciate in some value and then you can sell it. That is the best way that I could explain it to her as far as how she might actually use it. She really enjoys kind of stepping away from anything futuristic and kind of reveling in the past and nostalgia and low tech and things like that. So there's not a lot of practical elements to it other than trying to amass money. And she bought a house in Silicon Valley in the 70s for $60,000. She's fine financially, right?
Yeah.
So I mean, that house is now what 1.3 or something like that off a
Yeah.
$60,000 initial investment. She's fine, and plus she's getting retirement. She's got a pension. She's got her Social Security. She's got my father's Social Security. All of those kinds of things. She doesn't. I mean, and she doesn't spend any money. So she's just not motivated by something like that. So other
Okay,
than
so let's say so she's not the use case, right? So then this highlights exactly why I wanted to ask you about this. Who's the use case then? Who should be buying cryptocurrencies right now?
Basically, if you have money that you would like to see if you can get some growth out of it and you're willing to lose it and you want to try to understand both the technology and the cryptocurrency as an asset, then get in and put some money in and invest with it and play around with it and see and get on the boards that are out there and see if you can use it to understand it and make a little money. I would not treat this as something that I would put any money into that I'm not okay with going to zero.
Okay. So let's say I change the scenario here a little bit and I say, hey, the US government's going to create its own coin, just like apparently China is now creating its own coin. Does that change anything for you?
Well, I think that is the future. I think that blockchain is ultimately the future, some variation on what we currently know as blockchain, and eventually it'll get to the point where it's being used for fiat currency because of those advantages I mentioned on, this. You imagine the Secret Service not having to worry or decreasing the amount of capital they're diverting to counterfeit cases because it's almost impossible to counterfeit on a blockchain. Then that has advantages. The issue is there isn't a blockchain in the world that can handle the amount of transactions that are going on with the fiat currency like the US dollar. There's
Yeah.
computational bottlenecks. They can't handle that amount of traffic. And if it did, the computational power and the raw electricity it would require would almost be economically unfeasible.
Yeah, and that's one of the things I wanted to talk about. So I've been watching a lot of videos as we were doing research for this, and I know we've been talking about it for like 5 years, but there's just so many question marks with all of this, and it's also interesting, right, and exciting too to see things emerge. So I've been watching a lot of videos of people who are building like their mining farms and things like that, and one of the key components to this, if people are not aware of it, is that the amount of energy that you have to use in order to mine is crazy. It's a lot.
Mm-hmm.
Like some of these people were saying they're spending $2, $3, $4, $5,000 a month in energy bills just from mining Ethereum and Bitcoin. So I know a lot of people are converting over now and trying to use solar, which is great, and batteries and things like that. And I think it's kind of heading in the right direction. But there is a concern, right? And I remember you brought this up a couple of weeks ago, but there's a concern that they're using so much energy that it's kind of offsetting all the good that's being done with us, getting off of fossil fuel cars and things like that.
Yeah, it's so to be clear, wind and solar and all of these things are dramatic improvement over burning fossil fuels, but I still wouldn't call them clean technologies. It's still electronic engineering in general is a dirty process and it produces pollution. And I don't know how much the technology has advanced, but a not too long ago, a single solar panel would use up more petroleum energy than the solar panel would return in 20 years. So it's an advancement. It's not a home run solution. And now you're getting into the point because they're trying to the Bitcoin blockchain was set up in such a way that mining and processing hashes was set up to motivate people by earning Bitcoin, and then it became a competitive environment where the machine that processed the Bitcoin the hash first received some Bitcoin that set up an arms race so that now you have these ASICs, these purpose-built machines that are just being used to mine Bitcoin, and it's running up electricity costs dramatically. I know people who have installed solar panels on their property just to offset their cost, and it's creating shortages in other markets, which is driving up the prices in those other markets, which is having a detrimental economic effect. Just for me, for example, right? We've talked about gaming and stuff, and I'm like, oh yeah, I'd love to have a new gaming machine. I don't have to worry about having like a laptop that looks a certain way if I go into
Yep.
things from home, or I can build another machine at home for gaming, a tower. But good luck finding a GPU that's not like 6 years old or older, because they're all being bought up for mining rigs. It's creating
Yeah.
shortages within that. Which, if one thing I would say that NVIDIA, I look at NVIDIA and I see the shortages that are going on and the need for those GPUs, not just for mining, but also for AI and for self-driving cars and all those other, for any kind of AI application, VR application. That company's going to be doing great. That's one place I would definitely take a look at for a stock. The enabling tools behind blockchain and cryptocurrencies, it feels as though there's a reckoning coming. Like there has to be some kind of rebalancing, and I'm just concerned about when it's going to be and what effect it's going to have.
Yeah, and you make a really good point. A good friend of mine sent me a text like about a year or two ago when we were having this conversation about Bitcoin, and he was like, "Hey, it would have been nice to get these things at like 20 cents each, right?" And we were laughing.
Yeah.
So, and he said, I was doing some reading about the gold rush because I was studying San Francisco, and it looks like the people who made the most money during the gold rush were the ones that sold the pots and pans, not the ones
Oh
digging
yeah.
for gold, right? And it really resonated with me when he said that, because I thought, wow, you're right. Like the people making the cards, the people making the machines, the people
Yeah.
selling all the plugs and the cords and the fans and all that kind of stuff, they're
Well,
making a
also
killing right now.
the exchanges, right? So the exchanges are doing great. So Coinbase, I imagine, is doing great. And I mean, you look more broadly, who are the biggest companies out there? It's Amazon with AWS, who's doing the web hosting, and it's Google with the search that's getting people to those web applications. Those are the ones who are selling the tools. And so when I look at a cryptocurrency craze, I look at who are developing the tools behind it.
And so do you foresee, anything happening in 2021 that's going to be any different than what we're seeing right now, which is institutions buying into, 1 or 2% of Bitcoin as an asset, or Ethereum, or people, like you told me earlier, writing, scripts to kind of analyze the cost of mining the Bitcoin versus actually pulling the Bitcoin and things like that. Basically, efficiency software. Do you see anything else happening in 2021?
Well, I think the pandemic has been a significant contributor to Bitcoin's price because people are, and I said this on when we were talking about investments before, people are spending less money on actual physical goods and services because they don't need to, and they're pumping more of that money into investments, and I think that's benefited Bitcoin and other cryptocurrencies. As that process reverses and people start going out and they start traveling, they start spending money at restaurants and hotels and all those other places, bars, that some money will be siphoned off from retail investors from the cryptocurrency markets and investment markets in general, and we'll see a dip. It's also important to recognize that we went into a recession a year ago, February, and that was a month before all the shutdowns. So we've been in, just looking at GDP, we've been in a recession all this time, but we've kind of been isolated from the effects unless you're a small business who's been hit by the pandemic. It's been very focused on those industries. I think there's going to be a ripple effect that's going to affect everybody else over time.
Yeah, it's an interesting one. And I want our listeners to understand that Demetrius and I are not bagging on Bitcoin or anything like that. What we're trying to do is like really analyze it, like
Mm,
understand the value, because our angle and our perception of new technology always comes to who's going to be able to use it, how are they going to be able to use it, does it have seamless integration into their life, what kind of value does it provide, and we're really just trying to figure it out, honestly. I think this is going to end up being one of those topics that you and I will circle back on maybe every 6 months or every year, and we'll look back and see what happened and see if we can paint a more complete picture as each time big events occur,
yeah.
such as big institutions making purchases or huge hard fork happens or something like that. I think that's the best way to kind of look at this because, being completely honest with our listeners, like I spent a lot of time researching this and I still feel like I don't fully understand it all. And that's the whole point of being a user experience researcher like Demetrius and I for the last 15 years. Our job is to wrap our head around something and understand it very deeply so that we can make it better. And right now we're still in the exploration phase.
So I have some long-term predictions. I think it might be good to document, and we can take a look back.
Yeah,
Since
yeah, that sounds good.
so I think that it eventually, because blockchain has so many advantages, some version of blockchain it'll evolve and grow over time. Some version of blockchain will handle all transactions at some point in the future. All fiat currencies will be on some blockchains, and there might be a series of blockchains that are kind of interacting with each other potentially in the future. Before we get there, there's going to be a new generation of coins somewhere between where we are now and that potential future. And I think those coins will make the current coins ultimately obsolete. And I think they'll be built on advancements in blockchain technology that reduce the computational requirements, eliminate some of those computational bottlenecks and bandwidth bottlenecks, and resolve quite a few of the issues that we're coming across now when it comes to using cryptocurrencies simultaneously as an investment asset and as a currency. Once that's done, it provides a little bit of a proof of concept for eventually moving over into managing fiat currencies. And then once it gets to, once those get established, I think that the current cryptocurrencies, they're going to be basically in digital museums, right? They're going to be the Friendsters of our time. And I could be wrong, but that's just what I see happening based on just human behavior and how technology grows and how people adopt it and use it.
You know, for me, I honestly don't know what I would predict. I do know that there's going to be, or I do predict that there's going to be major fluctuations in the price of Bitcoin. And I think there's going to be regulation and there's going to be much clearer rules around how it's handled or managed from a government perspective. But beyond that, I'm kind of open-minded. You know, I'm like looking forward to what's going to happen. One of the things I was thinking about, Demetrius, right now is that like the next time we talk about cryptocurrencies, I'm going to bring in a guest. And I'm going to bring in someone who's either an expert in this area. I've reached out to a couple of people already, but we wanted to have at least one episode where you and I just kind of talked about it ourselves. Either an expert in understanding where Bitcoin was and where they think it's going to go, or I'm going to bring in a miner, a real experienced miner that can talk to us about what they're seeing over the last couple of years and how they think things are going to change as fewer and fewer coins could be mined down the line, right? And I think it'd be really interesting to ask them a lot of questions about this and see if as a group, as you and me and our guests and our listeners, maybe we can wrap our heads around this and really understand what this looks like for the future. And with that said, I think this is a wrap for our part one of maybe 4 parts over the next year or two on understanding cryptocurrencies and really figuring out what to do with them. With that said, thank you all so much for listening today. As I've mentioned before, please subscribe to our podcast on whatever podcast player you have, share it with a friend, and we will chat with you next week.